Well, we're in Edmonton, beautiful fall weather, 2023, and we get this question a lot, is what should we expect in the fall and winter market this year? So we just got back from our RE/MAX annual conference. RE/MAX Activate was in Vancouver this year, and my favorite economist, for those of us who have favorite economists, Benjamin Tall, gave a great presentation about kind of what to expect into the fall market, and wanted to share some of the key notes with all of you. So my favorite couple quotes were, one is the Bank of Canada is obviously top of everyone's mind, and interest rates, and many of our fellow Canadians and Edmontonians are feeling the pinch of rising interest rates. But I liked his quote, is that Bank of Canada are humans, and humans make mistakes. And so the bottom line is even they don't know right now what decision they're going to make on October 25th, which is the next announcement by the Bank of Canada, because they're waiting on information to come in. And so the two biggest factors he talked about were unemployment and the inflation rate. And so right now what we're seeing is that they will choose a recession over inflation. They're concerned that inflation is going to continue and they want to get that under control. And so they will deliberately put the country into a recession, which means 2 consecutive quarters of negative GDP growth for anyone who's not familiar with that. So it's not as scary as it sounds. But I think one of the positive things is that specifically, Benjamin even quoted that Alberta and Edmonton and Calgary's markets are likely to be the only ones in Canada to buck that trend. So even if you see national news talking about a recession, kind of not to worry for those of us at Edmonton. There's many factors that are leading to that, which we'll talk a bit about. But the other thing I thought that was quite interesting, and I've heard this online a few times, but I haven't been able to see like a graph or like a source stat about it, so we haven't talked about it, is that in Canada, what's interesting is it's a self-fulfilling prophecy. So the Bank of Canada rising, the Bank of Canada interest rate and banks following suit raising interest rates is actually causing inflation. So a portion of inflation calculation is housing cost, and in Canada that includes cost of ownership. So as they increase inflation or increase interest rates, they're causing inflation. So let alone on top of the federal government kind of printing money and causing inflation as well, adding money into the supply, monetary supply, causing inflation. Right now, if you removed interest rate increase, inflation would be under 2%. So keep that in mind as far as we don't really talk politics, but keep that in mind with your MLAs. And if you're feeling a pinch, have that be a factor in the upcoming next couple years as we lead into a federal election. It's housing is a major issue on a lot of people's mind. I mean, housing, shelter, and food are basic necessities. And so when people feel that pinch and that they can't afford the home they bought a couple years ago because they're under a variable rate mortgage, and rates have gone on the largest increase in Canadian history. This is the largest, bump and most consecutive largest ramp up, basically, to borrowing in Canadian history. So no one really predicted this. And so, people that are suffering from that, reach out to your realtor, reach out to us. We're happy to connect you with someone that can give you your options. There is an increased number of people that are dealing with affordability and cash flow on their primary residence or even rental investment properties. But the market's healthy in Edmonton and there's lots of demand. So it's often, frankly, even though it may not have been plan A, it is a good time to sell, free up your equity, and then maybe reposition that equity back into the market in a year or 2 years when you're in a different position. So yeah, a few other things. Soft landing is probable. That was kind of his consensus, is that we'll likely see, especially in Alberta, a very soft landing out of this recession. And if you're seeing any national stats, I like this one as well, is that in versus Canada versus the US, in the US, inflation only counts rent. The only housing component of inflation in the United States is rent. So ownership doesn't even factor into the calculation where it does in Canada. So it's apples to oranges. You kind of can't compare them. So don't, kind of ignore what's happening as far as inflation rate in the US to a certain extent, because they're calculated very differently than they are in Canada. So when are rates going to come down? That's the big question for a lot of people. When are rates going to come down? The Benjamin Tall prediction is mid-2024. And so I think most analysts and most pundits that are kind of predicting and trying to forecast this stuff would agree on that. And how much are they going to be cut? It'll be incremental, kind of same as they ratcheted up. They think they'll ratchet down and make sure that sort of inflation is under control. But we're likely to see a 1.75 to 5.75 drop over a year to 2 years, likely to end up with the Bank of Canada rate, so interest rates are benchmarked off of that for lenders, between 2.75 and 3% come, 2025 probably. And so hopefully that helps you kind of make some decisions with you and your family and your investments. The big stat I think that's important for us all to be aware of, or two big ones, is 2025, 2026 has 57% of fixed rate mortgages coming up for renewal. So these are all people that bought 5-year mortgages, fixed rates, kind of 2020 and 2021 coming out of that, in that boom coming out of the pandemic. And so we're also seeing some of those with people that picked 3-year fixed rates where their renewals are coming up now and are really under the gun as far as affordability goes. So reach out to your realtor, reach out to your mortgage professionals, get second opinions. Don't just go with what the lender's offering you. There's lots of other options in the market these days, and you have to be an informed consumer to make sure you're making the right decision for you and your family. But it's likely there'll be so much pressure on the government and Bank of Canada come 2025. That's kind of the latest point they could wait to bring rates back down. Or if not, it's very much a risk of an 2008 financial crash level, like what happened in the United States back in 2008. We would have over half of the mortgages coming up and people being really strained to be able to afford their new payments. And so there'll be a lot of political pressure at that time. And that is, again, unless it gets called early, the federal election is scheduled for. So I like this one a lot. And I think it speaks to realtors as well as consumers, is that, especially in Alberta, we're in a pause right now. The market's still quite healthy. We're seeing a lot of investors from Ontario, investors from BC buying into our market, people also moving, relocating from those provinces. The large majority of that was over the last couple of years, where we're still seeing quite a bit come in. Calgary's market has really gotten the majority of those in migrants, and to the point where their market's really stressed now. Like we've seen news and stories of hundreds of people lining up for rental properties, availability, like way more demand than there is supply. And so that's kind of the story that's a benefit of Edmonton. I mean, I always say my favorite part of Edmonton, outside of our beautiful skyline, is the people. Edmontonians are what make Edmonton great. And I think it's one of the best cities in all of North America, if not Canada for sure, to raise a family. And that is largely what's bringing people here, all those factors, right? But housing affordability is a big one. And Edmonton's still very affordable, like practically on sale compared to other markets. So the slowdown is a pause, and market will be very positive over the next few years. And the main reason for that is we let in 500,000 new immigrants to Canada last year, and Canada built 230,000 houses or somewhere thereabouts. And so way short of the numbers needed. And so if those immigration numbers continue, which is anticipated to continue happening, we will not have enough housing. There'll be too shortage of supply and way more demand, way more in-migrants. And Edmonton hasn't historically gotten a lot of direct international migration. Largely people went to one of the other major markets. Winnipeg, sometimes they do their 2-year, kind of do their time, we always jokingly say, and then they move to other provinces. Vancouver, Toronto area, and Montreal were the big recipients, Calgary somewhat as well. Well, now Edmonton is getting their fair share of direct international migration. We're getting people moving here direct from Asia, direct from India, direct from Europe, especially with the Ukrainian population, because there's such a big Ukrainian populace here. We're seeing a lot more direct international migration. So that's basically benefiting homeowners in Edmonton and property owners in Edmonton. And for those moving in, get into the market as soon as possible, because it's we're going to see prices continue to rise as that demand continues. There's also a recent condo market report that RE/MAX put out nationally, And I think one of the interesting things with Edmonton is properties that are trading below replacement cost. Like you literally cannot build the same unit now, in some cases, for half the price. So sure, they're older product, older buildings, maybe 20, 40-year-old buildings. But if that building had a fire, it will cost them more than double the price to replace it. So as there's more demand, you literally can't replace them. These units, and similar kind of story with single family, where you can buy a single family home for under $400,000 in a mature neighborhood, nice amenities around it, that the replacement cost is $600,000-$700,000. That pulls prices up. You can't replace it. So that's where the value, the fundamental value sort of lies. So definitely it's a pause kind of market in the next 6 months to 9 months maybe, and then we're really into a really bolstering market, likely for the next 5 years after that. So prediction made, and we'll see how the future holds. We never have a crystal ball. We wish we did, but the facts are pointing in a very positive direction on multiple angles. And like I've seen some funny memes and stuff online, as soon as interest rates start dropping, a lot of the people that have been holding off are going to start flooding back into the market, and we'll likely have a very, very seller's market conditions where it'll be tough for buyers to get in. So we always say, marry the property, date the rate. So get into the market now while it's slower. If you got qualification, if you're not sure about your mortgage options, talk to a mortgage professional. We have several partnered with our brokerage that we can connect you with, and know your options, know what opportunities are out there for you, and then you can make the most of it and look like a genius to your friends in 4 or 5 years, even 2 to 3 years.